All right, you can start.
Okay. So, good evening, everyone. Today I'm presenting Granules. Now, without further ado, let's get a bit of introduction done about the company. Granules is a company in the pharmaceutical space, is a high-growth, vertically integrated company, which is mainly headquartered in Hyderabad. The company deals in mainly three segments: API, PFI, and FD. I would explain each of these segments in detail in the product segment. The company share traded from 291 to 309 in the last 1 month, and with a high of 422.5 overall in the 5 years. The company has five main manufacturing plants, one R&D facility, and another under construction. Company claims to have customers in 80 plus countries with 96 total products, 67 of which are filings approved, and 59 are A&D approvals. Overall, the company has growth plans and is actively looking for M&A opportunities. And if when we will look at its historical, the company has utilized mergers and acquisition as a way to grow. The mission of the company is to be a global leader in the market with good foundations and lasting relationships, as well as the vision is to be innovative, unparalleled, efficient company. For a more detailed timeline, you could refer to the note section. This is more of a gist. First, in 1984, Triton Labs was formed. It was an API producing company in Hyderabad. By 1991, the Triton also opened a new facility in Jedimitla, along with Granules India was incorporated with another first plant in Jedimitla itself. By 2001, both the companies got merged, and in 1995, Granules got listed in Hyderabad Stock Exchange. Between 2003 to 5, the company opened a new PFI plant, started wholly owned subsidiary Granules USA, which till date is a wholly owned subsidiary of the company. There has been a new plant in Hyderabad, which is mainly for paracetamol. Now, paracetamol is a key integrated key API for the company because it's one of the main drivers of revenue from the API segment, approximately 14% in the last financial year. The company later, at the lower half of the spectrum, also entered the finished dosage, which is the main revenue driver for the company till date. Between 2010 to 13, the company also gained USFD approval for ANDS. A new API facility was established. Another R&D facility was established in Hyderabad. Now, in 2014 to 16, we can see that the company has done an acquiring of Actus for API manufacturing facilities. This shows that the company has a history of utilizing merger and acquisitions to catapult them into growth. Further, they also started a new subsidiary called Granules Pharma. Another subsidiary in the later years was also set up for European markets as well. The company also introduced a new oncology OCD plant in Vizag, which is Visakhapatnam. The new largest single manufacturing site was starting like made by the company, which is a MUP site, multi-unit pellet system, which was started in 2020, and by 2022 the plant was ready and is now one of the biggest plants that company have. Each of these topics will be explained in the further slides. This is just a gist of it. In 2021, the company also gained USFD approvals and CEP approvals for ANDAs like dofetilide, and later in 2022, the MUPS plant that was made back in 2020 was now finally in like mainstream. Further, there was a new R&D facility in Genome Valley. The company also acquired another company for which was like biotech, which was a biotech company, and it was like incorporated in the Genome Valley segment. In 2023 January, the company announced that a partnership with Greenco would be done to establish a new subsidiary called Granules CRO. This is one of the critical factors as the company has planned to do a 2000 crore capex over the next 5 years, beginning last year for this Granule CZRO. By 2024, the Genome Valley Phase 1, which was like the biotech incorporation in Genome Valley, would be done by a half, like by October this year. Now, to understand all these words that I mentioned here, that is API, PFI, etc., what they mean. First is the Granules mainly operates in three segments, that is API, PFI, and FD, on which the excess of the capacity that the company here has, they do that for contract manufacturing, basically allowing other companies to utilize their excessive capacity in exchange for like having their goods produced at their plants. The company is completely vertically integrated and its recent development is aimed towards backward integration as well. Now, first is the PFI segment. This contributes 20% of the revenue of the company. Now, a bit of the slide. First is that a company which is operating in the pharma segment and is like such vertically integrated as Granules, the main step for any pharma company is to first get the thing through their R&D. From their R&D facilities, they produce a chemical, and which chemical is then made to an API over extensive research and clinical trials. After that, an API is mixed with another excipient or another like chemical, that is a PFI, that is the pharmaceutical formulation intermediaries. These intermediaries, when mixed with API, like finally after some like more processing, becomes a FD. So an API company has to buy an PFI from like if they do not produce it themselves from an outside company, and then when they both mix them together and process them, then they make finished doses like tablets and capsules. So this is the main explanation what a PFI segment is. It's like a middle step between both API and FD. The granules has a total capacity of 6 tons, and excessive capacity that they have, like if in a financial year the company is only able to utilize 4 tons for their internal purposes, the rest of which is like lent out in a contract manufacturing fashion. This makes Granules like one of the largest PFI manufacturers in India, and is they claim to be a preferred supplier in the global market. They utilize mainly Jedimetla and Gaglapur plant for this, and then intermediaries are then compressed into finished dosage. Finished dosage is the 50% of the company's revenue FY23. The granules main manufacturers is like caplets, tablets, press fits in bulk, blisters, bottles, etc. Basically anything that a consumer produces in a bottle or a capsule or anything like that is a finished dosage that a pharma company produces. Gaglapur plant is the main contributor for this using their multi-pellet system. Now, what MUPS technology is like a big breakthrough in this new pharmaceutical FD segment, where which is like more stable than the uh, traditional methods that the company use. Is more like easy to consume, is less of a hassle. More information is in the segment if you would like to like completely get into the nitty gritties of it, and is like expected to be a growth driver for the company. The company till FY22 spent 240 crores for this block. FD is like supplied to big retailers in the US like Walmart, and this is critical because like major revenue of the company, like 53% or something, comes from US markets itself. Continuing to the API segment, API is an active pharmaceutical ingredient that is like basically research and development is done to make an API, which is like used for like making new drugs. Granules claims to have a 30% market share for the paracetamol. Now, paracetamol, we are all aware, we all have taken the paracetamol at some stage or another. Is like mainly supplied by the company to other parts of the world, and both RX. RX is the prescription segment of the whole pharma sector, because it's some countries mandate paracetamol to be a prescription drug itself. Other is an OTC side, which is like over the counter. You ask for it and they give it to you. Other drugs that they produce is ibuprofen, guaifenesin, and metformin. Ibuprofen is like a direct competition of Solara, but they are not mainly aiming like getting any major revenue from ibuprofen. Now, there is also the ANDA filings that I mentioned in the first slide. So the main difference between a DMF and a ANDA filing is that a DMF is a drug master file that a company has to file with US FDA for getting their drug approved in their own markets. This filing includes anything and everything, like from proprietary information like formulation, the clinical trials, etc. ANDA, on the other hand, is a more of a filing that is done pre-DMF, done to like get to let them know about the drug that you are filing, and it does not require any clinical trials, and obviously it does not go to market when an ANDA is filed. So the company in general have a total of 96 products, out of which 69 are 67 is approved, 2 are tentatively approved and have gained approval in the like FY23 reports, and 27 are yet to be approved. As for a forensic check for the company, first is that they gained a 70% score, and which is like 16 by 23. The promoter ownership is around 42%. However, a majority of which is gained by a single person. So the main promoter has a lot of skin in the game, but the overall promoter ownership is only 42%. That's why it's a zero. There is only 4% pledge shares, which is why it's zero. Highlighting more on the pledge shares and the way the company's debt cycle work, which would be reinforced in the further points, is that For growing, Granules has a very cycle of utilizing the debt and pledging their shares to up to the extent of like 40-50% till they have a good base of funds or capital that they utilize to grow their company, and over a period of time in next years they start to like decrease the pledged shares, which is the result of this 4%, and decrease their debt, and then do it again and again for like growing. So that's how their whole pledging shares and their debt cycle works. Total RPD to sales is 25%, and there was only sales of goods that was done in FY22. This is further in this segment, which where the company in like the specific segment does not deal with any promoter, KMP, or director, but have one-fourth of its sales is from a wholly owned subsidiary. Moving forward, the company does give loans to its subsidiaries, one of which was if I recall correctly, given to Granules USA, the one their subsidiary that they set up for US markets. That's why it's a zero. Other expenses I have compared. Other expenses of revenue at a standalone basis is 17% and a consolidated basis is 20%, which is both higher than the 15% prescribed levels, which is zero. What comprises of these other expenses would be covered in the further slides. The other expenses by revenue is average of two companies. I wasn't able to exactly get another competitor. However, when comparing with like the API and Crams wala competitor, that is Newland, the company had exceeded their like direct like to like comparison of other expenses to revenue. Another point that the company mentioned was that their overall contingent liability by net worth, which was only 1.29%, which is low as compared to the 10% figure we have here for a like statistical one. But the company in like one of their reports clearly mentioned as well in the con call repeated that they have some contingent liabilities, but they cannot reliably measure it, so they don't have it. So this point might require a further insight. As for a manufacturing segment, instead of providing like a very distributed format, I've tried to summarize everything in this table to ensure that we all are on the same page. All the capacities, unless otherwise stated, are in tons per annum. So there's that. There is a first plant is in Muntapalli, which has a 34,560 TPA capacity, mainly for API. They have now, in the last few years, have set up an intermediate facility, which also has a capacity of 175 KLPA. Further, there is a Jerimetla and Regulable plant. These were mentioned before as these are like the bigger like contributor to their overall capacity. Jerimetla was their first plant, which is for API. They further extended that plant to PFI with a 1.2 tons PFI batch size, and these are the capacities in TPA. This is like Gagillapur is the biggest plant the company has, with like if you would just see the direct figures, uh, like in thousands to like see the 10,000 of TPA capacity for PFI, 21.6 billion for like FDs, and the multi-pellet system that was recently introduced is also in the Gagillapur plant itself. So this is like the main capacity giver for the company. There is also Parvada U4 and U5. These were like those plants that the company has acquired. Parvada, this one was the plant that the company I guess acquired from like Octus, and these the Pravada U4 plant has a very low capacity for API, but have recently gained US approvals for, so the company can increase this plant in their overall size. In the US Unit 5, the company has API and FD both, and there is a division given by the company in oncology and non-oncology, which is also covered in notes if you would like to get to know what this difference is exactly. Further, there is an FD capacity of 1 billion PA from like this 1.071, and 71% is for like capsules. This is the plant that the company has in USA, not India. So this is done by the company to mainly like directly supply and produce and all that initiative for grants done for that like Make in America initiative. So the company has set up this plant and also was mainly for R&D, but they have added a new packaging segment, which is now like expected to be operational by FY20 September 23. There is also Genome Valley plant, which is like whose phase one is like expected to come online October this year, and phase two be expected to come online in like FY25 May. This would contribute approximately 8 billion to their overall capacity. And as for like this total tentative FD capacity would be rising to like 32 billion. And as for the planned outlay, there is 250 crores planned outlay, which is covered in the capex slide. The name for this Unum Valley plant is actually Granules Life Sciences. It's also a wholly owned subsidiary of the company. As for the capex plan, the company's main capex plan over the next 5 years is Granules CZRO, which is a wholly owned subsidiary of GIL. It's expected to be in Andhra Pradesh with the partnership with Greenco, done mainly because of the fact that the company is expecting to capitalize on a bill that the European Union would pass expected in FY26. The entire capex for it is 2,000 crores over the next 5 years. 92.5 was done in FY23, and rest is expected to be done like subsequent years. Further, there is a Granules Life Science, the Genome Valley plant, which is like a phase-wise deployment, and the company's like first phase is this year, and the next phase is next year. As for other factors, the company is also expecting to buy more warehouses in US to prevent price erosion. This would be covered in the key risks factor. The To summarize what the company's capex plan over the next financial years is of 700 crores. Now, for 100 crores is for land, 150 crores is for 2 KSM. A KSM is a key starting material that the company is expecting. Further, there is also a commercial plant that they are like planning to utilize this money for. Further, there is 250 crores for Granules Life Science in Genome Valley, and 200 crores is for regular maintenance and warehouse expenditure. Moving forward to the revenue share, the API segment is 30, PFI is 20, and the FD is 50. This ratio has been more or less equal over like in the last financial year or so, although the numbers have grown approximately 20%. The company is mainly dependent on US markets and Europe market, from which approximately 75% of the entire revenue comes, and the rest is distributed over the world. The top molecules, as I mentioned, is paracetamol. Note that this is like the 46% of this 30%, which is effectively approximately 15%. So like all these numbers are the 30% like subparts in the molecule share. Ownership structure, the company has around 24.8 crore shares of each of one, like face value of one. The promoter holder is like 42.02, which as per the June disclosure, as per the FY22 disclosure is 41.98. Further, the company's main holder is Krishna Prasad Chirugupati, which is the main holder and holds 35%. Now, this is the reason why I gave the main promoter to have enough skin in the game, because of the fact that of the majority 42, the 35 is held directly by Mr. Krishna Prasad, as compared to like we have seen in Mr. Arun Kumar Pillai, who's like holding it very indirectly to save tax and some stuff like that. Further, there is a total pledge shares of 4%, which the company has like trying to decrease over the past few years. And in FY23, the company did a buyback of shares where the promoters also participated, but not much change was observed. And total expense was 310 crores, and for which the company also funded it through debt. As for FIIs holding, there is 21.35 held by FIIs, of which like the company there is Fidelity and its subsidiaries holding 5% or more combined. There was not much mention of the like exact distribution of to make the sums add up, but this was like the main party that stood out as per my research. The FII's stake diluted to around like diluted around 2% to now 21.35. DII stake in the FY20 by FY22 has almost doubled to around 6.68%, which is mainly held by LIC and Aditya Birla Group. The public state has been decreasing to 33 to like 29.95, like which was mainly done due to the buyback that I mentioned here. Now, all the figures here are taken on a consolidated basis to provide you with a more of a like a larger picture, mainly because of the fact that all the companies are owned and wholly owned by like Granules itself. The R&D expense of the company is 2.5% on average in FY21 and 22, whereas the guidance that they are giving is 3%, which, in my opinion, as of all the pharma companies I have looked at, is like slightly low, because every pharma company aim for at least 4 and more percent of R&D expenditure. But this could also be justified by the fact that the company is not that big in API. They are looking forward to API segment growing, but it's only 30% of their total revenue. So that is a bit of a point that you could ponder upon. Further, the Granules have one R&D facilities in Virginia, and which is like starting to have a packaging site installed there. And there is a Genome Valley who's like dedicated to R&D, but is also having a new phase this year. For margins, the company on a year-on-year has been delivering a good margin. Like if you see the 30% line, it's always been over 30% even in the bad years. And the sales of the company has in the last 10 years grown last 10, 5, and even 3 years has grown steadily by 20%. The margins in FY 21 and 22 contracted a bit. This was mainly because of the fact that the company, in their disclosure, stated that the paracetamols had a decreased sale and there was a price erosion in US market. And the sale that got increased was the product was like lower margin PAP products. Whose even with despite the higher sale and like the company being able to support their 20% sales growth, wasn't able to like that much expand their margin at that time. The company is utilizing both debt and internal funds for like doing this. This was also the in FY 24 Q1, the company had a major IT outage. Within one of their disclosures, they clearly stated that this this IT attack would impact their Q1 results. So that is also expected. The company has taken all the necessary measures for the same. Now, if you would look at like the end of the FI. Yeah. So if you would look at the FY 22 decrease, this was also, if you would look at why the company has not been able to come back entirely to their pre FY 22 levels, it's just because there was a 3PL supplier, which was by end of the 3PL is a third party supplier that the company had, which which like had some issues, which led to a delay in their container delivery, which also made the company face penalties, lost sales. The company has now like tried to uh, change their suppliers and have done it by May FY 23, May FY 24. But this total like change and all the penalties costed the company 5 million USD dollars. The company has been able to like steadily convert their gross margins and EBITDA, and this fall is like mainly because of the fall in the margins, and which is also supported by like convert like the EBITDA to EBITDA percentage. If you would look at the debt to equity, this would support the earlier point that I stated that the company utilizes high amount of pledged shares and high amount of debt, and then over the period decrease it, then they do it again for growth, and then they decrease and then they do it again for growth. This slight peak was mainly because of the fact that the company was trying to buy back the shares from which utilizing all their, which was done in FY 22 and was also done in FY 23. The company did a buyback, and this led to a slight increase in the debt. Overall, the guidance that the company gave was that the net debt to EBITDA would stay below 1. If we look at the entire composition of debt, the company had a 30 crore net increase in the total debt, from which the majority in like FY 22 was short-term debt, which the company either converted or either paid back, and they tried to reduce their dependency, which was like now increasing like quite a lot because of the CFR rates. The CFR rates are the short-term overnight funding rates that was increasing rapidly for the last 2 years, and the company had to decrease their short-term debt because this was like starting to cause the company's interest quite a massive hit, which we would see in the valuation sheet as well. There's also increase in the lease liabilities from around 17 to 48 crores, mainly because of the fact that the company bought more warehouses on lease in US, and this is expected to grow slightly, but no guidance on the exact numbers was given. The company is able to utilize their like overall asset turnover in a stable manner, even if their sales growth every like 20% every time. However, the number for the fixed assets turnover was less than 1, but the net fixed assets were utilized overall like up to 2% in the recent years. The company is aiming for a 2.5 to 3x asset turnover with 2x for the MOPS plan, which came in 2022. Now, the days of working capital had increased, which is mainly due to the fact that the company is overall efficiently decreased, and this was expected to fall further, but the 3PL supplier issue like restricted this number to not falling quite a lot. The company is overall trying to increase their operational efficiency in the RX, that is the prescription drug side, in the FY 24. Overall, the company was able to give a 20-25% ROE, ROC like on a average historical basis, but the company in like at their peak gave 25%, but when in FY 22 there was like that all those issues led to the margin contraction and other inefficiencies, but now the company has increased their debt further, so that's like supporting ROE and ROC thoda upwards, right? Now, for a ratio comparison with the like more of peers, The main comparison I've done was with Newland, which was like directly competing in the API and CMS segment. However, I wasn't able to get a company that was also operating in PFI at this stage of a similar market cap. There's also Jubilant Pharmova. However, it was a loss-making company, so I haven't taken its PE. And when compared, the company looks slightly undervalued, but the like key FD segment is not that overlapping, so the we can't make exact judgment on it. Similar goes for the price to book and price to sales, where the Granules look slightly undervalued, but Jubilant Pharmova is as compared to Jubilant Pharmova, which was loss making in the last year, is like slightly overvalued. So yeah. As for a major event, the company is paying at least 6% dividends every year to their like to their shareholders. The company had a buyback of in FY22 and was finalized in August. The total cost of which was 310.6 crores. And as for why the CSRO event is happening, the company is trying to capitalize on the EU carbon tax policy that is expected to come like full force in January 2026. Further justification of why this has been done as like providing in the notes segment that I mentioned in the group. Further, there is like the company is mainly trying to utilize this probably regulatory issue that would come and like hit all the companies across the board with the increased prices because they would be like effectively utilizing their effectively utilizing their carbon emissions, and the company would gain like is trying to gain a edge using it in like a long term perspective. As for the main comprising of other expenses is mainly carriage and R&D, which is to be expected from a like pharma company. Further, there was two distinct items that I haven't seen in the like other expenses distribution. One was the effluent treatment expenses, which is done by these pharma companies mainly to treat the wastewater that they utilize in their plant. This is for like 18.59 crores in FY22 report, and there was allowance of scripts on hand, which is like expect like the company hasn't utilized it yet, but they would like utilize it in the future. Now, the growth triggers. The first is the real moat of, in my opinion, that is the best thing that the Granules has done is the complete vertical integration from R&D to FD, which is like the one of the main factors that the company is able to sustain have give a like a sustainable result over a period of time, and is also able to like give a good ROE to the like overall shareholders. The company is also rapidly like utilizing new products. Granules has constantly launched new products in like both key geographies, and the latest is like the latest approval that they gave was an ANDA approval on 14th July from US FDA. The Granules Lifeline plant is to be expected to come online, which would further increase their capacity with a total of 8 million. But this is the combined figure for both, if like the phase one and phase two. Division between both was not given by the company. There's also the MUPSPEC technology that is like very critical for the company and is utilized by the company to like focusing on expanding. And there is also green initiative that the company is doing, which is like the 2,000 crore capex plan. The main reason is to like capitalize, as explained, on the carbon neutral policy. Further, with lower emissions, which that they are expecting, the EU would like levy heavy taxes on the high emission companies, would help them remain stable and also gain a competitive advantage if other competitors do not catch up quickly enough. As for key risks, first is the breach of servers. The IT attack that happened in Q1 FY24 does show that the company needs to rework their whole ERP and ERP system as well as the overall security, because this might not be as big of a deal in some other's perspective, but in my opinion, when a API and a farmer like a company that is operating in API, the entire moat of it in an API is the entire formulation of the drug that they have won and gain a IP on it. And if the IP is leaked to the public, the even if the company tries to like file it in court, it wouldn't that like wouldn't that be much helpful? So a better servers is like a better ERP system is expected that the management like pull their operational efficiency back. Now, one of the factors is that the management does, like the promoter does take a good cut of pat. There was a share buyback which had like the promoters involved. There is like a high salary, less than the like mandated figures, which was like almost on the neck and neck level in FY21 report, is as per a thread I found on Value Picker. But now they have like decreased it slightly, and there's also the dividends that the like promoter gains. So the promoter does take a heavy cut from it. There is also that supply issue that the company is facing, that the third party logistics company are delayed in shipments, led to loss of sale in the US market, over and above the fact that the company has been facing a price erosion in like for last a couple of years, and in FY23 alone they have seen a 12 to 15% price erosion per annum, and this is expected to continue further. The erosion is mainly in like the main US market and other key geographies like European Union, and this is like leading the company to thinning their margins, having the competition and like in both organized and unorganized players. So that's more on the entirety of the presentation. A bit on what's in the nose session. This is the Granules Green Co and the plan that the company has given for the entire segment. This is a multi-unit pellet information that the company this like MUPS technology provides benefits over the traditional FD that the company is utilizing, mainly in like reduced side effects, bioavailability, like more easier to have patient compliances and reduce side effects. The division of API in the that one plant between onco and non-onco is like what they are is provided here. This is more of a detailed timeline if you would like to see it, and this is the point that the Nirvana sir put it, why not other companies are capitalized on the green chemistry initiative. When I dig deep into the reports of Sun Pharma, Dr. Reddy Lupin, etc., I found out that these teams have some sort of lower scale initiative program or team incorporated for this, either for CSG or ESG, CSR or ESG guidelines for like green chemistry itself. Or window in the one of the reports in 2022, I didn't go very deep into it, but it found that they have a green chemistry initiative of 100 crores. But when they start this investment wasn't disclosed at the time, maybe disclosed now, but I haven't get dug that deep into it. There is also a report that I found that the pharma companies are like aware of that the green chemistry is one of the pressing issues in future, but they're more investing in the water pollution segment. That is the one of the other expense that even Granules is doing, that is of 18.59 crores, that is was mentioned before. There is also major reasons that there is some resistance to change because these are the legacy companies. They know that they are too big to fall at this point, and they are not expect like moving that much, but they because there is like really high uncertainty on this part. So that was the justification I arrived at for this like question. So that's pretty much it on the like report part. If there are any questions, I would love to take them.
Good presentation, I think. Also, I mean, granules look pretty interesting in the charts as well. It's just forming a rounding bottom. So,
Yeah.
but that green chemistry overhang, maybe Nirvan, what do you think? I mean,
Yeah, great presentation, Pratham. I mean, I don't have any questions because I've studied the company. So, yeah, I mean, I don't know. Otherwise, everything looks good to me in the company, but the 2000 crore capex plus every year they are going to do 700 crores of capex, I think, in the next 2, 3 years. So, that sort of see, if I have to take a bet, I would rather take a bet on Solara at this point of time. I don't see space in my portfolio for two companies like this. So, because of the green chemistry capex, I decided to not look at granules anymore and took a bet on Solara. It's a good company, definitely, and it was going through a down cycle. As you said, chart looks good. So, yeah, not sure about, let's see. I'll find out if my call was right or not.
yeah,
There was like if I would just to share my tab on their screener. If you would like, in my opinion, why I haven't like really said that to be reflect, because if you just see their operating expenses, that's like their CFO is good enough to like supplement their entire investing activities, and there is also like the financial activities. So even if the CFO increases, they would be able to support whatever investing activities that they are planning. So yeah,
Yeah.
that's more of my opinion on that regard.
Oh, that's
So I
true.
would
That's true. So I
sorry.
don't think that their debt will spiral or something like that. I am more sort of questioning the nature of this 2000 crores. See, this 2000 crores is not going into expanding capacity. So revenues won't increase as a result of this 2000. Neither is this 2000 going into backward integration, which means margins won't expand. This 2000 is going into uh, preventing a regulatory restriction,
Yeah.
threat, whatever, right? So maybe what they are saying is our market shares will improve because other companies are not doing this investment, they are doing this investment. It's a hard sell to me that why are much bigger, larger API companies? Why is Divi's not doing, green chemistry investment? Uh, so that's where I got stuck at. Cash flows are fine. I mean, they can, okay, they'll take some debt and they'll manage the capex, but that is the question I could not understand. So is it like money not optimally getting used, or is it good optimal use? I couldn't conclude there.
Also, I mean, any such regulation, if it comes mandatory, it will give like 4 to 5 years for the entire companies to upgrade their facilities and all. Like we also have similar items in the automotive industry.
Yeah.
Any new regulation comes, we are given like heads up 5 to 7 years in advance. So yeah.
Yeah. So, Pratham, any insights on that? Like, has the regulation, is it like a guidance so far from Europe, or is it a hardcore regulation?
What I found was that when I searched this entire green bill, whatever they were talking about, was that they are expecting this, as per all the guidance that they have given, to be in full force by January 2026. But like what I read backwards, like kya itna time kyun hai, it's like stuff like that. This they were like saying कि they have started to like implement this carbon wali cheese, but full force tab tak aayega. So it could be. I haven't like researched about the entire thing, but yeah, what I this is what like I got the gist when I did like a hour or so research on it.
Hmm.
Also, from a risk reward point of view, I don't think Granules is as what do you call attractive
It's
as Solara.
no, it's
Probably
not
it's
as
it's fairly
undervalued as Solara. Yeah.
it's fairly
Yeah,
valued, mostly
Yeah.
near its median.
yeah,
Yeah.
almost it's medium. It's like 15
Uh,
पे चल रहा था आज ही देखा था मैंने.
So
So I'm
see,
prepared.
Granules never collapsed also like Solara. Like Solara
uh,
had a horrible year also. So it makes sense that Granules didn't fall so much. But as a result of which, I think the upside also is a little limited compared to Solara. If provided Solara, keeps up with its last quarter's performance and keeps the turnaround on. So
I mean, what I looked at was like in my valuation, if I were just to share that, the company is at 310 abhi, and the max I was expecting it to go is like 380 as per the
hmm,
valuation. So yeah, but
okay.
there is like this interest component that I wasn't like having trouble modeling. So should I like present why what are
Yeah,
my assumptions on it? First is that there's all the consolidated figures because everything is owned by them, and there has been like 20% sales growth and 24, and if you would net it that it's like 20% over last 3 years, last 5 years, last 10 years. So they are expecting to be grown at 20%. They have like a stable material cost as well. Further, the like manufacturing cost was like 6.3, 6.2% of the revenue. That is why I have taken like this breaking to be 6.2, and this was like the less leftover portion of the overall thing. And like they have a 10% or so, which is I guess okay. Although generally pharma companies dealing in APIs do go up to 15% of their overall revenue in employee cost because of like R&D thingy. Then there is other incomes which was like really high here, but they like fall because like इससे पहले on FY21 की report में भी there was like massive foreign exchange gain, and ये तब से like काफी ज़्यादा बैठ गया, तब से like these figures are like very low as compared to that, which is why I also taken like any two figures का average. Further, there is like interest expense. This increased because like of those SOFR rates that the companies keep mentioning. Further, they took additional debt as well. So there is that. The depreciation expense is also there. Then there is tax that they are paying around a very strict margin of 22 to 27, 5% margin के बीच में, and they are having a good profit of like a margin of 11, 10 to like 11 to 17 wala. As for as for there are a total of like 24.83 crore shares of the company, each of face value 1, and the current market price is 309. So first is like the modeling of the revenue. I have tried to model it on the basis of like the Q1 expected indication of the IT attack that which would lead to their growth of like 10%, may even go to like a negative growth, like even a negative growth of sales. And on basis of that, I am tried to model this, and the last 25% assumption was mainly due to the all their recoveries and all the new plants that would be like incorporated in Q3, like as I said, the genome value would come online. So that's how I tried to model this. But if you were to even ignore this the K figure came out to be 20% when I like summed it up, which is in my opinion like okay, because then like if you see any of the last 10 years average, the company was giving 20% itself. Further, I have taken the average of last 4 years in material cost, not the fifth because it's like an outlier of sorts, and this I will provide a more of like a better image for the companies, and for that's the reason for that. This is expected to be 6.2% and this is I increased it slightly because the company was saying that they would increase like 3% of their entire revenue on R&D. So from 10.5 to an 11% jump over of top of a 20% growth would be, in my opinion, justified. Further, this is an average of the last 5 years because the company has been in this 11 points and 12 points wale bracket mein. This gives an EBITDA margin of like calculation of the entire thing. Further, the other income was average of the last years. Now, on an interest expense modeling, the companies I try to like have a dual side approach, whatever net to EBITDA value approach, which came out to be 97.63 when I tried to model loosely tried to model cash of 100 crores generation, a slight uh, incorporating that to a slight growth, and then pointing at the debt out on the basis of the net to EBITDA guidance that they gave, which came out to be 0.95 on the overall scale, which gave the interest expense to be like on a 7% basis to be like 97.63 crores. However, going more into the aspect that I'm more like familiar with, the number came out to be like 7% on long term and 7% on short term. We gave these figures for the entire duration. Didn't incorporate lease liabilities because you pay rent on it, not interest. Further, there is an additional expected it on the whole understanding because the entire CFO wouldn't be able to cover the entire capex if we look on a broader base on they have to pay interest as well, they have to pay other aspects as well as there was a 3PL issue and stuff like that. So I expect the company to take like 150 crores of additional debt between the year, and on that basis whole interest would come to be like 79.83. The figures go drastically different from each other to like 20 crores or something. So that's why there is a red. A further insight would from you guys would be
So,
appreciated this
so
topic.
one, yeah, so one question to you is last quarter, their interest cost was 19 crores.
Yeah,
Okay. So if you annualize the 19 crores, that is 76 crores, right?
yeah.
So that is very close to your estimate using this
Seven.
approach. Yeah. So now, don't you think that interest cost will definitely be higher than 76 crores because they will be required to take on more debt, right?
Yeah.
Given their
Given they
capital.
if you look the entire thing, yeah, they would be required to take debt or either like raise equity. I mean, they could also do
Yeah.
that.
They have not talked about raising equity, so I'm assuming their capital raise will be through debt. So
Hmm.
at least 80 crores तो हो जाएगा मेरे ख्याल से. ठीक है, this is just me not modeling anything, just using common sense. So मतलब yeah, so 80 and the other one you have is 98 crores. So yeah, okay, fine. I mean, you can keep it at 80 and maybe 10 crores here and there,
I
like
mean, yeah,
can.
if you could like average it, it would come
So
somewhere around
around, yeah, around 90, yeah.
oh, sorry,
That's okay. I mean, 10 crores here and there.
88.5,
Yeah, yeah, yeah.
88.5. So yeah.
Around
Yeah,
10 crores here and there, we can, after sort of Q1, Q2, you can model it very accurately. But
if they just publish the Q1 thingy तभी हो जाएगा मॉडल बिकॉज तब तक उनका वो
हाँ,
सारा कितना नुकसान हुआ है स्टफ लाइक दैट उससे सब कुछ क्लियर हो
हम्म,
जाएगा.
तो रिजल्ट तो आ ही रहे हैं अभी कुछ दिनों में मिल जाएगा तो वी कैन मे
आ
बी
जाएगा.
टेक अ रिवाइज लुक एट दिस एट दैट टाइम या
Yeah, so the depreciation modeling, what I did was to first take the revenue and get the net fixed assets past के. On that basis, get further आगे का net fixed assets and back model it. And if you would see the last 10, like 5 years of figures, they were like 10 to 11%. So I modeled it at 10%. As for this CWIP, which was like 228 crores, and in the company's August 22 con call, they guided that 100 crore capex would be done this year and realized like दो साल बाद, this is August 22, so like last year. So I am expecting that like 100 crore वाली चीज to be not utilized, and 125 crore that would be like the 200 250 crore from Genome Valley, which would come in September. So that's like half the year, and this CWIP coming in like Q2 में, and उसमें not utilized वाले को हटा के I like, if you just see I minus that 100 crore, and on that basis and duration measuring it, I came up to this figure, and then further ये वाली figure on like the CWIP that would be realized in the net fixed assets, which is like added यहाँ पे, and
Yeah.
on that basis back calculating 10% के ऊपर, so that's how I gain this figure. 208, if you like add both
So
200.
one way is to sort of back calculate using the net fixed asset turnover, right?
Yeah.
The other approach is, since they are giving guidance of capex, right? कि exactly कितना capex करेंगे, you can also use that. So current depreciation तुम्हें पता है, capex 700 करोड़ होने वाला है, वो भी पता है, तो उसके हिसाब से भी you can model it, right?
uh, more or less उसके हिसाब से, because if you just like look back at the capex guidance that they gave, 700 crores,
Yeah,
250 करोड़ उसमें से फेज वन जिनोम वैली था, जिसका फेज वन सितंबर में दे सेड आएगा
right, right,
सो वो तो हाफ ईयर पे ले सकते हैं हम लोग.
right.
फर्दर इफ यू लुक एट लाइक एक सेकेंड दीजिए बस मुझे.
हाँ, 200 करोड़ मेंटेनेंस कैपेक्स था
हाँ,
एंड बाकी
200
तुम्हारा ग्रीन
मेंटेनेंस था,
केमिस्ट्री
एंड
था.
ग्रीन केमिस्ट्री वाला तो इस साल आ ही नहीं सकता, बिकॉज दैट्स लाइक 5 ईयर वाला. सो दैट्स हाउ आई ट्राइड इट.
यार वो पता नहीं, मतलब मे बी द ग्रीन केमिस्ट्री, देखो ऐसा तो नहीं होगा कि यू डू द कैपेक्स दिस ईयर एंड इट गेट्स कैपिटलाइज्ड आफ्टर 3 years, ऐसे तो नहीं होगा. तो मे बी ग्रीन केमिस्ट्री
आई
में भी
मीन
समथिंग दे विल कैपिटलाइज.
there was I just missed one point. There was like land that they said that they would buy for 100 crore.
हम्म.
So if we incorporate that,
लैंड तो
that
डिप्रिशिएट नहीं होता है.
अच्छा, हाँ तो फिर लाइक उसको करके भी
इट्स
इट्स लाइक
ओके, ठीक है, मतलब देखो
रफ
यार.
फिगर 10
या,
करोड़ अप डाउन जा सकता है ये भी,
हाँ
बट या
ठीक है, दैट्स
दिस
ओके.
इज द बेस्ट गेस आई कुड कम अप विद.
So your PAT is 563 crores.
Yeah,
Okay.
roughly, and on
Okay.
the basis of the average of the
And
whatever
what
tax
valuation multiples are you attaching to this?
I attached to this PE, and on that basis, it came to like a valuation of roughly 16.5, which is above their median, which was, I guess, 15.1 या 2. So slightly above median, and on that basis, the max they could go is like 37 point,
Hmm.
374 point.
हाँ, मतलब देखो, median is one thing, but another thing you need to see is, देखो, when you're investing in something, okay, then even if like the P touches 20 at one point of time, you can sell and get out, right? So in the, when you're looking at the median P chart, a company which is doing 18% plus ROCE and throwing good cash, right? CFO is pretty good. CFO EBITDA ratios are good. It has a long track record. This kind of company, you should realize that 20 PE इसको, भले ही ये मीडियन ना हो, 20 PE मार्केट इसको कभी ना कभी पहुंचा ही देगा विद इन योर इन्वेस्टमेंट हॉराइजन, राइट? अनलेस यू आर वेरी अनलकी. तुम अगर पी का चार्ट भी देखोगे तो तुम्हें दिखेगा कि यार 20 तो टच कर जाता है. हालांकि 7 अक्टूबर 22 के बाद से टच नहीं किया है, बट साल में एक बार, साल में 2 बार 20 के आसपास टच कर जाता है. तो while it's good to model it on sort of medians, also start forming a view कि इसको कितना पी मिल सकता है, looking at its ROCE, its cash generation, promoter track record, company's reputation, कितने दिनों से ये कंपनी मार्केट में है, right?
Hmm.
So using all that lens, I think इसको 20 PE पे मल्टीप्लाई करके अगर हमने निकाला मार्केट कैप, it's not something, unrealistic. So in your model, the P could range from say 15 to 20. Yeah, because you don't know. It's sort of it's fuzzy, right? But I don't think 15 to 20 में कोई भी multiple is unrealistic. I think it's entirely possible.
Okay.
So just giving you a perspective.
Also, like I didn't do इसमें अभी, but like वही सोलार वाली चीज भी करनी थी इसमें, like couple of multiples पे try करके.
Yeah, 374. Okay, 374 using what multiple?
P 16.5.
Oh, 16.5. तो तुमने 16.5 कैसे डिसाइड किया इसके लिए?
Slightly, it's like more of
Above median.
a, yeah, slightly above median, cause company का like
Okay.
forward looking अच्छा चल रहा है.
ठीक है,
So
समझ गया,
it's seemed more like a reasonable thing to be.
समझ गया. So this includes the IT hit in this projection.
This is like the like पूरे साल की projection that I'm expecting. So even if the IT hit happens over the year, like पूरे
It'll
साल
get
के ऊपर वो like recorrect कर ही लेगा खुद को.
correct,
So
correct. So it's according to that, right? It's as if the IT hit did not happen. IT hit did not happen.
yeah, like even if it does, if overall perspective में इतना फर्क नहीं आना चाहिए मेरे हिसाब से. और अगर आया भी तो it would be like better कि like उल्टा
Hmm.
cheap हो गया and then cheap होके फिर skyrocket करेगा to its like
Hmm. Hmm.
what
Hmm.
the market generally expects it to give. So
Right. ठीक है. Okay, makes sense.
I would do
Yeah.
एक बार वो 3 वाली e-way भी done other stuff भी and एक बार try to see a
Yeah.
3-way approach इस पे भी. I
Yeah.
haven't done it because Solara के बदले I was like busy on so much and stuff like that.
Yeah. 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 No, that's fine. I think good job on this, Pratham. I think clear-cut analysis and more or less I have similar kind of views on the company. Yeah.
So yeah, Gaurav sir, any
Yeah, yeah,
questions?
same feedback, and I'm more or less clear on this business.
So should I like
All right.
start?
Yeah, you can stop.
Yeah, you can stop, Pratham.